This is Banwo and Igodalo's special legal podcast, with focus on thorny matters and novel issues in the legal and regulatory environment impacting transactions in this jurisdiction. On this podcast, you will listen to Banwo and Igodalo's legal experts bring to the market on weekly basis fundamental developments and emerging issues in legislation, regulations, judicial decisions, and arbitral proceedings considered to be of interest to the legal market and to domestic and international investors across sectors of the economy.
The speaker for today's episode is Tunji Adeyemi. Tunji is a senior associate in the firm's shipping, aviation and international trade practice group. He is a versatile lawyer with extensive experience advising domestic and international clients and industry leaders in the maritime and aviation sectors. Please relax and listen as he reviews the recent aviation-related tax incentives with their impact on the aviation industry. Welcome on the show, Tunji.
Thank you very much.
Please give us a broad overview of the tax incentive recently given by the government for the aviation sector.
Okay, so with the enactment of the Finance Act 2020, there were a few amendments to various tax laws. Specifically in relation to the aviation sector, there were three specific amendments of the Value-Added Tax Act, the Customs and Excise Tariff Act, and the Capital Gains Act. Even though there were several amendments that touched on different things in relation to the aviation sector, the specific incentives for the aviation sector essentially related to exemption of VAT on certain aviation-related products and services. Now, just to give a bit of a background, value-added tax, or VAT as we all know it, is applied on virtually all goods and services. But scheduled to the law, you see that there are certain items that are exempted. So what the law did was simply to just include certain aviation-related products and services which will be exempted from the purview of VAT. Specifically, that includes commercial aircraft, engines, spare parts. It also exempted airline transportation tickets which are issued and sold by commercial airlines in Nigeria. In relation to the Customs and Excise Tariff Act, what the exemption provides is that all airlines registered in Nigeria which provide commercial air transport services will be entitled to duty-free importation of their aircraft, engine, spare parts, and all other components. So in effect, in bringing in an aircraft, spare parts, engines, any component part of an aircraft, it will be exempted from import duties. Okay. And if sold in Nigeria, it will also be exempted from VAT.
Okay, interesting. Now, how do you think these incentives will impact the aviation industry in Nigeria?
I mean, the first thing that comes to mind is we expect that there will be a reduced cost of operations. This is an industry where most of their OPEX is denominated in foreign currency. So what you typically find is the major expenses that airlines need to incur would have to be expended in foreign currency, while unfortunately their air, particularly for the local airlines, would be in Naira. So already, if you take out these taxes, you would expect that there will be a reduced cost of operations. And of course, we've started to see that already. As of mid-February, we had quite a number of local airlines were ordering for more planes, and is obviously a resultant effect of these tax incentives. Secondly, we also expect to see a reduction in the cost of airline tickets in Nigeria. If you just take a brief look at any airline ticket that you have, you see taxes, specifically VAT. Mm-hmm. If that is taken out, you expect that airline fares would significantly reduce. And this is particularly important post-COVID because immediately after the airlines were asked to resume operations, what we saw was a very huge spike in airline tickets. And so you had almost 100% increase in airline tickets, which obviously was unaffordable for quite a number of users along those routes. But with these tax incentives, those that have tracked these expenses have said that it has come down significantly to about 30 to 40%. So obviously we expect that this would continually impact the industry. Then finally, what we expect to see is, a lot of new entrants into the industry because the cost of entering into the business would be significantly lower. I mean, if you are going to pay 5% import duties, pay another 7.5% VAT on all the aircraft and engines and spare parts and whatever, and this cost is taken away, it then means that the cost to enter into the business will be significantly lower. And so, specifically on the 26th of February, there was a news report by Business Day that said there were at least 25 investors who are at different stages of procuring their air operating certificate. Particularly in a post-COVID era, it's really quite unprecedented. And that report specifically attributed this very increased interest to the tax incentives that have been given by the government.
Interesting. Now, do you think the incentive is sufficient enough, or there's still more the government need to do?
Okay, so I think the first thing the government can do is to clarify their intent in amending these laws. So take, for example, in relation to import duties, I'll read the exact wordings of the law. It says airlines registered in Nigeria and providing commercial air transport services are entitled to duty-free importation of their aircraft, engine, spare parts, components, whether purchased or leased. Now, that word duty-free, if you check any legal interpretation of it, it suggests that all applicable taxes, would ordinarily not apply to that specific import. Interestingly, there was a development just last week where what the Customs Service said was that, notwithstanding that there was exemption to custom duties and VAT, importation of aircraft will still be subject to relevant charges based on the ECOWAS Trade Liberalization Scheme and the Comprehensive Import Supervision Scheme. And in the specific instance where they mentioned, which was in relation to aircraft that was imported by Air Peace, we had close to 200 million duties just based on these two. So if the intent is that this entire industry would, enjoy tax incentives and all importation of aircraft to be duty-free, you can't then say a component of certain duties would still be subject to aircraft importation. So I think that's the first thing they need to do. They need to clarify whether certain import duties will still be applicable while certain other ones will not.
I mean, I think it's a good start, to be honest. As you can see, the impact has been almost immediate. This law took effect January 1st, 2021. And by February, we're talking about increased order of planes. By March, we're talking about reduction in airfare tickets and what have you. So clearly it's a good start. There's no doubt about that. Okay. The only problem that I see is there appears to be a missing link. I mean, the amendments were done across various tax laws, and I mentioned the VAT law, I mentioned the Custom and Excise Tariff Act, but the government appears to have missed out one particular tax law, which is the Stamp Duties Act. And it's pretty strange because what you find is that as of today, the Stamp Duties Office applies stamp duties on all lease agreements in relation to aircraft. And even though it's a scale, you will find that the upper threshold is about 6%. So if you are going to pay 6% stamp duties on lease fees, then clearly it appears that that's a missing link in this entire structure of trying to give tax incentives to the industry. Okay, so that's something I think the government needs to look at. I mean, so there should be an amendment of the Stamp Duties Act as well, so that particular incentive will apply to all lease agreements in relation to the lease of aircraft. Secondly, I think in terms of what more the government can do, like I said earlier, the operating expenditure of many airlines is in foreign currency. And we're all aware of the challenges in sourcing foreign currency at the moment. Of course, we know that there's about 3 exchange rates at the moment, one from the CBN, another from Interbank, and thirdly, the parallel market, which is popularly known as the black market. It's getting increasingly difficult to get Forex at CBN rates, which means that these operators will be constrained to go source for their Forex in the parallel market where it's very expensive. So we should be looking at some sort of prioritization, as it were, for airline operators, where they can get foreign exchange directly from the CBN at much cheaper rates than they will get it from the parallel market. And if that were to happen, obviously we'll reduce their cost of operations again, and we will see a cascading effect on the entire industry as well.
Thank you for listening to this episode of Banwo and Ighodalo's Legal Podcast. For more insights, hit us up across any of our socials, that is on Instagram or Twitter, at Banwo and Ighodalo or at Africa Business Radio.